It has never been harder for small and mid-sized businesses to borrow from traditional banks. However, this challenge is creating one of the biggest opportunities in commercial lending we've seen in years. Over the past few years, regulators and risk teams have pushed banks to tighten their standards. Higher rates, new capital requirements, and concerns over credit quality have led many banks to pull back. For countless business owners, the answer they receive is not yes or even maybe. It's simply no. The demand for capital hasn't disappeared. Companies still need to refinance debt, buy equipment, fund inventory, and seize opportunities. What has changed is who is stepping up to provide that capital. This is where private and non-bank commercial lenders are thriving. Independent finance companies, specialty credit funds, fintech platforms, and private credit shops are moving in. They are more flexible than banks, quicker in decision-making, and often willing to consider deals that don't fit a rigid mold. Instead of saying you don't qualify, these new lenders ask, Emmer, how do we structure this so it works? This might involve shorter terms, interest-only periods, asset-based lines, or creative collateral packages. In return, they can charge healthy yields while still lending to real operating businesses, not just speculative bets. Technology is amplifying this shift. Digital applications, open banking data, and automated underwriting allow lean teams to evaluate more deals in less time. Basic analytics can flag fraud, track performance, and monitor risk without needing a massive back office. The result is clear: more speed, more visibility, and more confidence in the credit you choose to fund. For entrepreneurs, this moment is a turning point. If you understand credit, know how to analyze a balance sheet, and can build relationships with borrowers, there is room for you. You don't need to be a giant bank to compete. You need to be sharp, responsive, and clear about the risks you will and will not take. We are witnessing a transition from a bank-dominated lending world to a blended market where non-bank lenders are just as crucial. For business owners, this means more options. For savvy lenders, it means more opportunity. If you've been considering entering commercial lending or partnering with lenders to place capital, the window is open right now. The credit squeeze is real, and those who solve it are poised to build very big businesses,